and to really comprise what really transpired, break it down, and make sense of three important questions for the week ahead. I'm Nisha, and with me are Alex as well as Hiral. Hi guys, and let me also welcome on the show our guest today, Manish Sonthalia, Director and CIO at Emkay Investment Managers. Manish, always a pleasure to welcome you on NDTV Profit. Looking at the market trajectory as well as the oil prices and the war, my one question would be, are we testing 23,000 once again, which we did at the peak of the war last time?
Look, everything said and done, FIS selling has abated quite a bit. So that was not the case when we last tested 22,000. We didn't test 23,000, we tested 22,000. Secondly, we were in the middle of a AI play where India was not a part. Today we are in the middle of an anti-AI play where India is a beneficiary. So the aggression in terms of selling by FIs is not there. Earnings has so far held good, right? And hopefully this re-emergence of the war settles before the second term or mid-term election out there in the US, which is around October, November. And we have a lifeline of 30th of September in terms of FCNRB flows. And we have already reported $21 billion worth of flows that has already come in. Hopefully we'll get $50–60 billion. Given this backdrop, plus 38,000 crores worth of SIP flows,
38,000?
I mean lump sum, including lump sum. Including lump sum plus SIPs, 38,000 crores in spite of so many uncertainty. Currency is a worrisome fact because pre-war we were 96, today we are at 97. So keeping all these things into perspective, I mean, we are still 600–700 points away from Nifty. I mean, it can fall because every incremental news flows regarding currency is detrimental because 97 is really ugly, you know, and the biggest apprehension is the currency, 97. I mean, it can fall to 23,000 if this thing doesn't resolve very soon and looks very ugly. It's so, you know, prior to this, or let's say just after the signing of the deal, it was very optimistic for India. You know, we were so positive.
Yes.
That positivity has tempered down.
So it's just been like what? In 10 days, everything, tables have just turned. So the question I have, Alex, for you, Nisha and Manish is anyone really able to make a bet from here on? That's the question.
So actually, I'll couch it differently. With crude at close to 100 and it breached $100 to the barrel for a bit after cooling off, are all bets off? Is the question.
I don't think so.
Why?
Okay, so think about it. You're talking about crude which is at 100 or say even 120. Let's take 120. It's for a brief period. It's again coming off. Unless and until crude was at these elevated levels for a very long period of time, then I would say probably bets are off. Here we're talking about only the level of crude. We're not talking about the time horizon for how much time is crude staying elevated at those levels. In my opinion, if crude stays elevated for a very long time at 100, 110, 120, let's take a quarter, then you're guaranteed, you know that, yeah, probably all bets are off. But here for a couple of days it's there, but it averages out lower for the month.
So you're challenging the first half of the argument in the first place. You're saying that it's unlikely that crude will stay at 100.
100%.
But so my problem with that...
So out here there are 2 or 3 points. The world is oversupplied with oil. It's the supply chain bottleneck. Right? Saudi Arabia said we are going to give you a discount of $11 on crude when the price was at whatever, $75 or $70. So it's not a question about whether the supply is there or not there. It's there.
It's being choked.
The supply chain bottlenecks in terms of transportation, which is the major issue. Once that clears, we shall see the oil price coming off for sure. Because everybody wants an increase in output because of the Middle Eastern economies, so on and so forth. But the point is whether this whole thing gets resolved quickly.
Yes.
So that's the point, right?
How long does it
Unpredictable
last?
as of now. Because if the second time around this thing has got breached, the ceasefire, what do you say? What do you predict?
So in case people are unaware of what has happened this week, right? Just to spell it out, you had the Strait of Hormuz, which was the choke point all this time. And then in the interim, the Red Sea was being used as a route by Saudi Arabia to pull a certain amount of oil out and supply to the south and to the north. Now the south route has gotten shut off, where apparently 3 million barrels per day was getting pushed through. And that was coming to countries like India. A few tankers still making their way out, apparently going to China, but not to India. So the question that I think arises is, at this moment, seemingly based on what crude experts have pointed to us, is that countries like India have used that little bit of a lull to bolster their stocks. So you're okay till August. But then if the situation persists beyond that, it's a major macroeconomic
100%,
problem.
because second half, if this doesn't get resolved, it's an inflationary shock once again.
All right, so Manish, how long can we really sustain with these kind of elevated, this thing? That the patience has to run out at some point. Everybody thought that it will be 2 to 3 months, then it spilled over, then we quickly saw the crude fall, and then again we are back to square one. I would like to also claim that last week in this particular show, I had stated that $80 per barrel average, the moment that gets disturbed, the markets will start reacting to crude oil prices, and that's exactly what played out in this particular week. How long can we hold the patience? Because our real macroeconomic material impact on the ground is visible because of oil prices.
So we have seen $120 of crude.
Yeah.
Right? We are currently at 100. We have seen 96 on the currency. Today we are at 97. Only missing point was FCNRB announcement. I think markets will give the benefit of doubt to India and even the FIs. Post, let's say oil was below 80, aggressively positive on India. Beyond 90, less positive on India, though not yet pressing the sell button massively. But still very less positive. I don't think they will go aggressive on India more than $90 per barrel. Lifeline for India is 30th of September. FCNRB cutoff date. If this thing doesn't get resolved, second half is going to be a washout.
So there's a buffer. So that very neatly lends us or leads us to the second part of this conversation, which is the consumption story. And you talk about there being resilience in certain pockets. You obviously do not look at India as a big cohort, and there are so many micro stories that play out. So if you look at Nestle results, that shows you, and even Eternal to a certain extent because of the velocity of the demand there, both of those show you that the demand is very strong in urban India, possibly at the premium end of the spectrum. But if inflation comes through in the second half for various reasons, including the southwest monsoon delay, there is going to be a rural impact, and that's going to reflect for FMCG companies, which have been robust so far. What do you guys think?
I'll let Manish go first on this one.
You know, my 2 cents on this is basically rural economy gets impacted if you have 2 bad monsoons consecutively.
Right.
Okay.
So last year was a good monsoon. This time around, patchy. Of course, now things have recovered even in the western part of the country.
Yeah.
Southern part was okay. You had the green belt, which was a bit iffy in terms of the monsoon rainfall.
Yeah.
And overall, I think there's still a deficiency, but you don't have 2 consecutive deficiencies.
Right.
So consumption is not that bad as is being made out to be. That is one, rural consumption. Secondly, I think in consumption, challenger brands will challenge the incumbents. So incumbents will, I mean, how's the mindset of the consumer today? They don't really care about the brands. The millennials, the Gen Z, they want good product quality. So the incumbents, I mean, Nestle is an outlier for sure. 4 categories, they're still reporting the highest growth.
Yeah.
Yes.
I mean, in terms of
24%.
Absolutely. I mean, it's an outlier, and this is only once we have seen in Nestle this sort of a hyper growth over a period 2013 to 18, if I'm not mistaken. But this is not the norm. I don't think, you know, you'll have across the table in FMCG report this sort of number.
Yes.
In fact, the incumbent brands will struggle on volume growth.
Right.
More than double digits for as long as you can see.
For argument's sake, can I make one important point that, okay, you are saying 2 consecutive monsoons will have an impact, but food inflation because of delayed monsoon, which could have impacted certain crops in different geographies for different reasons, climatic reasons. That is one aspect. And if we have crude also at elevated prices, double whammy of that, adding to that inflationary bit. And let me add one more aspect, and you can throw more light on that. Urban consumption is very strong, but in the long run, we are seeing a lot of job losses. After COVID, companies have also gone into too much cost efficiency. At some point, the ageism, AI impact on the jobs will impact the urban consumption also. I'm not saying this year, but in the long run. So putting this together, how do you see with double whammy of inflation and the latter part of this financial year?
So I'm not so negative on consumption per se at this given point in time, both urban and rural. Having said that, if oil was to persist beyond 100, there is going to be an inflation shock which will weigh on consumption 100%.
Okay, I will come in over here. Do you think it will weigh on consumption on the urban side or the rural side? Because the way I am looking at it, to be very honest, is it will weigh in more on the urban side of it, because the discretionary spend, where you talk about autos, you talk about travel, you talk about premium luxury, that's where you will start seeing cuts. And if those cuts happen, it's going to be more on the urban side and not on the rural side. One. And two, when you're talking on the rural side of it as well, that is going to still remain to your bare basics, that's your staples.
Not necessarily, because rural is also upgrading big time.
Yeah.
And as
Agreed.
No, just 1 second. The food grain production is ample.
Yeah.
Correct.
So if you, let's say, have a deficient monsoon, there will be certain crops, cotton, oil seeds, where we are importing, or let's say horticulture, fruits, vegetables, these will be inflationary.
Correct.
Imported inflation will be a trickle pass-through across the board. So logistics, raw materials, metals, commodities, all of that will feed into inflationary. More so in the second half if oil was to persist at these. There's no doing away. We are still importing a lot of oil. So that is one aspect. And second is basically the top 5% of the population don't care about inflation.
Yes.
It's
Exactly.
the middle class which will suffer, which has already been suffering because of high taxes, because of high inflation over the years, last 2-3. Look at any mass consumption category.
Yes.
Where is the growth?
And savings are getting impacted, not the consumption on the other hand.
But my point on this, and to your point of challenger brands, I would like to maybe provide a contrary view, because in times like this, when there is input cost inflation, there is a pressure on the margins, hasn't it proved to be that the leaders in the category consolidate and they have more pricing power, as a result of which they're able to, maybe to the extent that they can, scrimp margins just a tad bit and control the market, grab more of the market, as a result of which
So the incumbent brands, more so in the staples, FMCG, they're all in penetrated categories.
Okay.
You can only deal with the volume growth to the extent of premiumization. I don't want to allude to names, but think of any large FMCG brand and think of any new brand which they have launched in the last 10 years. You will come to a negative answer.
Okay.
Everybody is sitting on their laurels. The challenger brands are challenging their, because the millennials and the Gen Z don't care about the brand name, they care about the quality of the product. And distribution, which was a major competitive advantage for all the incumbent brands, is dissipating. With 16 cents a gigawatt, 16 cents a GB of data cost, e-commerce, quick commerce has disrupted
the market. I wanted to come to exactly this, Manish. While we are talking about consumption, it will be unfair to not talk about this sector which is growing so fast, which is the delivery-based quick commerce. And in my view, it's overcrowded. How do you assess this particular market?
No, it's a very tough category.
Yes.
Unit economics, to get it right, is not just a function of the amount of cash that you can burn. Right, because there are many food delivery companies and which have come and gone. Right, and even the largest ones have not been able to crack the code. So today, for record purpose, I mean, you have just one player, Blinkit, who is earning positive EBITDA margins per order, and their quick commerce went from 2,500 crores of GMV to 15,000 crores per quarter GMV, and they are not yet penetrated throughout the length and breadth of the country, 2,400 stores. So I think the size of the market is immense. India has gotten to the habit of having everything in 10 minutes. You can't do away with that. That habit formation is permanent. Number of players may come and go, but it's not very easy. You know, your burn is going to last your cash only till a finite period.
Even categories of quick commerce in the makeup and cosmetic
Beauty,
space have also started delivering on an SOS basis now, because the mindset of the consumer has changed.
Consumption, these BPC, fashion, the problem is not the first time sale. It is basically the unit economics of the return.
Yeah.
See, an apparel you can order, you get it, or let's say footwear, you get it. But what about the unit economics when you decide to return it back?
Which most people will, a lot of people do.
Discretionary, and that is the biggest loss factor.
So actually, it's very interesting because anecdotal evidence, I'm not sure whether other brands are doing, and I don't want to name the brand, but somebody was telling me about one particular clothing brand which has got an application which delivers, right? And they've actually, over the course of the life cycle of this customer, identified the type of product that they generally buy, the size of product that they normally convert and keep. And so when they are sending products, they're offering products of a particular size because they differ. Women will know this, right?
Yeah.
A 32 of this particular type of dress and a 30 of another particular type of dress. So the company is offering that to this particular customer. They've collected data over a period of time, and so they're reducing number of returns for something not fitting. Right?
I mean, that's the algo play, right?
It is the algo play, and that's, I think, going to become a much more nuanced play going forward.
So look, fashion, high fashion, it's all about assortments and your storing capacity. So mass products, you can categorize in terms of algos, SKUs, etc. But let's say high fashion, particularly when it comes to the women's segment, it's a plethora of assortment that you need to keep. To be successful, you need to have that sort of warehouse space. Those sort of assortment. So inventory is the biggest play when it comes to fashion.
Actually, inventory is the biggest play when it comes to quick commerce also. All of these guys are moving to dark store models and they have to build out their stores.
So assortment is very important.
Yes.
Cities, the better purchasing power, you first need to be in those cities only.
Yeah.
So a few of these quick commerce guys made the mistake of venturing out into tier 2, 3 towns and cities where you don't have that pricing power, you don't have that average order value. And your unit economics in terms of loss per order only gets exaggerated. You say that I've seeded tier 2 towns, but the unit economics just doesn't make sense at this given point in time.
But assortment wise, good you mentioned that. Now everybody has replicated each other's assortment. What I get on Blinkit, I get on Swiggy also, and maybe on Zepto also. Now product offering has to expand. We recently saw Swiggy tie up for cylinder gas also distribution. And so now they will have to find innovative ways of increasing their product offering and cracking that code on unit economics.
See, what works in quick commerce, and this is what I have learned over the last many years, is what are the success factors for a quick commerce. One is that you should get that assortment. You should not be seeing an out of stock. That really repels the customer the second time. First time you'll agree and they say, "Isme to product hi nahi milta hai."
I totally agree with you.
And the second is 10 minutes.
10 minutes.
So you have to get your assortment right. And mind you, the customer is today spoiled for choice. You even want air conditioners in 10 minutes. I don't know how you're going to install it. But that is the norm.
But that's what it is. That's what you're moving to, right?
So houses. Okay. Before you want to move on to the next one.
Yeah, we were just talking about the next. I mean, we were thinking of 3 things that we wanted to discuss.
Yes.
We discussed oil. We discussed consumption. The other thing is pharma. Yes, quick commerce and pharma is also becoming a play right now, where you have pharmaceutical products, medicines, and everything that is available as well. But what about the threat that the pharmaceutical companies are facing from Donald Trump? I wouldn't say tariffs. Because time and again, that gentleman has come out and said, I am going to tax or I'm going to put in tariffs when it comes to Indian generic products. Do you think it is really a threat from here on? Because the way I am looking at it, or in fact, yesterday when the comments came in as well, I was of the opinion that yes, probably the sector would react negatively, but it would be a sentimental reaction because you're talking about a horizon of 3 years. Your views?
No, so America is not a low-cost producer.
Exactly.
So, 2 major important factors in terms of low cost and high cost. One is manpower, second is power or energy cost. Both these things are far expensive in the US than what it is, let's say, in developing parts of the world, including India. So, and economies of scale. Batch processing is another ball game, bulk manufacturing is another ball game. China is a leader in bulk manufacturing, bulk drugs. India is a leader in batch processing formulation. And mind you, the customer in the US, in spite of paying a lot of intermediation charges, because from here we supply it to the main distributor, from there it gets distributed. So in that, the value chain, the biggest value capture is with the intermediary, who is a guy who is in the US and is a US entity. So I think, at even today's prices, what we are sending to the US, the margins are abysmal.
Yeah.
We don't really make too much of margins. If this tariff was to come through 100 and 200, these guys will stop supplying to the US.
Of course.
Yes.
And then what happens to the supply chain? What happens to the patients?
They can't afford it.
That's the point.
Yes.
So that is what the markets are reading into. That obviously it has been prescribed, but whether it's going to get implemented.
I think it's bluster. I think it's bluster.
I think, it's more of a headline risk right now, the way I put it. Maybe an execution risk next year and a structural risk only if this entire policy sails through by 28.
So, good point.
So most of the companies are of the view that with lobbying, US trade deal is still on the horizon. This will also be one of the cards. All put together, it will not go through.
And I think the only reason why Trump is even doing this is to some extent trying to actually get that capex from India to the US.
That's it, basically reshoring.
That's the only reason
bring
that he's
manufacturing
doing that,
back
right?
to the US, lower the trade deficit, all those things are intentions. But I don't know how far it is practical.
I think it's saber rattling, but interesting that we're here talking about generics, right? And I think it's a distinction that we need to draw increasingly when you look at the pharmaceutical space in India. We're saying, are you looking at these guys and you're saying, okay, their time has been great and they have in the past been wealth creators, but you just said it. The margins are absolutely abysmal, product to product. Even the GLP-1 opportunity has been talked about. Eventually, will become commoditized, and so they'll be scrimped on margins. And so, do you want to look at them, or do you want to look at certain other players that are in the more chronic spaces that are growing in India? Are those the companies to look at? Do you
Specialty.
Specialty.
Generic,
No.
commoditized.
Yeah.
You want to be in the building block chain, that is to say APIs and KSM, which goes into specialty, or you want to be a part of the research value chain, which is CRDMO and CDMO.
CDMO.
Because India gets that advantage on China Plus One when the Biopharma Act has got passed through in the US. Wuxi Pharma it's all blacklisted. India.
So biosimilar space also plays out.
Correct.
All right,
We are moving away from small molecules, large molecules and biologics. There is where the value is.
So is the House really united on this? That
I think it's
a
bluster.
little far-fetched.
I think it's bluster, but there's so like I said, you're going to have to distinguish. Generics are still on their way down.
Right. So, Manish, to sum it up, which are the themes now developing you think are looking much more attractive? Of course, banks, a lot of people say that, a very attractive valuation, but the downside risk is also there. What, in your view, in terms of the valuation at present moment, is looking quite attractive as a theme and as a sector?
So, you want to be in resilient sectors because politically, geopolitically, we are all over the place. There is zero predictability. The second time around when this thing has got breached, you don't know when the solution is going to be there. Oil is on its way up and so on and so forth. You want to be in resilient sectors. Of course, the headline sectors which is making all the news is basically your high-tech manufacturing, which is aerospace, defense, semiconductor, medical, or you have data centers, or you have energy transition, the value chain, a lot of value is going to be. The problem is to find actionable ideas because of valuation. It's a 5-year story, everybody knows that. Near term, what happens? You have to pick and choose. There is one. But I think the resilient sectors, which I have found out this result season so far, in the middle of this uncertainty, one is the financial sector.
Okay. Yeah.
12, 13, 14 P multiple on the banks, large banks, mid-cap banks, you take your pick. Capital markets, everything is so resilient. We don't tend to feel any pain in terms of volumes going down. Whether it is annuity businesses like AMCs or broking or wealth management, things are fine. And the third is basically your consumption, which I think is a dark horse. It has not done well. Select pockets are likely to do much better in this
valuations also, a lot of places are reasonable as compared to what we've seen.
And the last but not the least, and think about this, I don't know, but this is just blue sky thinking. IT has fallen quite a bit.
Yeah.
Rupee is at 97, right? Anti-AI play. favoring
Yes.
Indian IT services.
Yes.
If not a structural bounce, there'll be a pullback.
There'll be a pullback.
So,
Okay, so certainly interesting ideas. Manish, thank you so much for taking the time, and always a pleasure having you. Certainly in person, in studio, so we hope to have you over much more
And the
often.
themes and the sectors that you said, and you so vehemently backed the consumption space, I think that was really commendable. So you
Thank
really have a solid commitment to the consumption story of India. But with that, it's a wrap on this edition of Editor's Cut. Thank you so much for joining in, and thank you so much, Manish,
Thank
for being here. Thanks.